As of late December 2025, silver has just completed a historic year, surging over 130% to 150% to reach record highs. While current spot prices are hovering near 75-80 per ounce, the outlook for 2026 is a tug-of-war between aggressive retail optimism and more cautious institutional forecasts. Here is the breakdown of the silver price predictions and the factors driving them for 2026. Price forecast summary for 2026. Estimates for the coming year vary significantly based on whether analysts focus on technical momentum or fundamental thrifting, industrial pullback due to high costs. Source: 2026 price prediction. Outlook, retail sentiment. Polls. $100 plus, extremely bullish. 57% of retail traders expect triple digits. Bank of America, $56 to $65. Bullish. Sees silver averaging around $56. BMO Capital Markets, $56 to $60. Cautiously bullish. Sees current highs as potentially overextended. UBS, $55. Moderate. Recently upgraded from $47. TD Securities / Citi, $42 to $45. Bearish / corrective. Expects a reversion to mean as supply stabilizes. Aggressive analysts, $72 to $90. Momentum driven. Focuses on price discovery mode. Key bullish drivers. Persistent supply deficit. The market is facing its fifth consecutive year of structural deficit. With silver often mined as a byproduct of other metals, copper / zinc, miners cannot easily ramp up production to meet demand. Industrial green demand. Silver is essential for solar panels, electric vehicles, EVs, and AI data center infrastructure. Demand in these sectors is projected to consume nearly 20% of the total global supply in 2026. Monetary policy. Expectations of Federal Reserve rate cuts in 2026 typically weaken the US dollar, making silver more affordable for global buyers and reducing the opportunity cost of holding non-yielding assets. Gold to silver ratio. Historically, silver outperforms gold in bull markets. The ratio has dropped from over 100 to 1 to under 65 to 1, signaling that silver is still catching up to gold's gains. Risks and potential pullbacks. Industrial thrifting. At $80 plus per ounce, manufacturers may look for cheaper alternatives or use less silver in electronics, which could eventually dampen demand. Overbought conditions. Technical indicators RSI show silver is in extreme overbought territory. A violent correction to the 50-54 support range is possible if speculative momentum fades. Inventory normalization. Some banks, like TD Securities, expect supply shortages in major hubs like London to stabilize, which could remove the scarcity premium currently baked into the price. Technical outlook. Technically, silver has entered price discovery mode. Having cleared the psychological barrier of $50, there is little historical resistance. Upside targets, $88 and $100, psychological / Fibonacci extensions. Downside support, $54 and $47, key levels established in late 2025. Would you like me to look into how specific industries like solar?
So guys, as you see over here the silver, and you see it's already guy holding all the way above this moving average, but remember key line here, it may be compact to test this around 52. That's why when you see on technicals or when you use Google, you will see this thing, it might be going to come back to test probably around that 50. Remember, nothing's going. Remember, this sideways is just, remember, just it's not going to be moving all the way. Like, yeah, even here you see the previous months, years, it came to 49s, and after he broke that 49, it was a most parabolic move. And another thing you need to see, if this thing is already moved a super breakout. So this is has been acting like a resistance. Remember, this a long time ago, since 204. It happened like this one here. Yeah, like this one, it was a super trend. Yeah, so we have that one as a super trend. It breakouts and came down. So you see over here, it was resistance. When we broke it, we had that long leg up, and it came fighting or trying to hold that area. So remember now we kind of already broke that resistance right now. It was 2011. So if you try to draw another chart here from all the way from that area top 2204 and you see another resistance, you see very close here. Yeah, so another one here. So nobody will tell that you can do like that. And if this one will broke all the way here, we are expecting this thing to, you see this one, to go all the way to 150. So remember that will be our third target, and nobody is going to predict that one, guys. So if you came all the way to do the long-term Fibonacci retracement, since we broke out long time ago, 2011, you see, you take this for 2011 Fibonacci retracement. Yeah, that's what you will try, and then you count the deepest one who came around $12 here, around COVID-19. That's when during the COVID-19 we broke that one, and our next resistance now is going to be 111. So very easy, guys. This is thing short squeeze is happening right now, and we are heading there. And okay, let's try to use another Fibonacci again, and our Fibonacci for today, we are going to use the 2021 high, which is also, you take that, broke out around $49. Yeah, you can take that one. Yeah, 2029, 2021, that area, and you put the deepest for 2020 around $11 to see which one will come first. So you see $90 will be highest, okay, if you use the 2021 high. If you don't want to use that one, so if you use this one, this is telling you around that 88 or a $90 that we saw on here will be our next resistance. So guys, thank you so much, and see you next video.